All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 205. I'm here today with Arnaldo, Matt Money,
Yep.
and someone who hasn't joined in a while, but he's back today, even though he's going to be keeping up with his basketball games on the side because he is gambling. Steve, what's up?
Amit, Arny, Matt, how are you?
It's a great day to be here with you, Steve. Do you have an air horn on your sound bar, Amit?
I don't. I should.
Like with the great Steven Fiorillo and no? Okay.
That's a good idea. No, I should get that.
You should.
Steve, right now, do you care more about UConn or Palantir?
UConn, because I care more about UConn for the next probably 40 minutes or 30 minutes. There's 15 minutes left. There's gonna be timeouts and stuff. So
Okay. Well, at least you'll care about Palantir more.
they're up 5. We need to be up 6 because the spread's 5.5.
See, I'm not familiar with any of these terms, but you are making a killing doing it.
You're not familiar with these terms. You don't watch movies. I don't know.
What do you do in your life?
Yeah, that is.
Exactly.
I did want to know. Like, Amit, did you feel inspired after that half an hour of Steve just telling you how little of a childhood you had to go watch something, or did you just take a nap? Or
No, I didn't care. I just
we know you don't care because I've heard this conversation at least 3 times.
yeah, every time it happens, I'm like, I was not even inspired to pull up an illegal movie site to get these movies. I was like, no, we'll eventually, maybe. But we're here on Palantir Weekly. We got a lot to talk about. Thank everybody for joining. We missed the last 2 weeks because primarily I've been traveling, so we had to delay it a couple weeks, but we are back. We had an AIP con since then, which was awesome. We'll recap what happened at AIP con. We got about 17 new commercial customers that were announced basically in a week, which was really awesome to see that momentum. And Steve put out a new article today about Palantir in regards to its valuation. Palantir is back at $90. Probably timely to discuss a little bit around the macro and what's going on with its valuation. And so we'll address all those as well. Arny, it's been a minute. How have you been?
Well, right now it is a little bit tough because it's 4 a.m. and there is this hour difference making stuff even more brutal. But being sleepy aside, I would say great because we're always waking up with these shakes on one side, on the other side, reminding us that being an investor is both simple and tough. It's simple because most of the time you end up doing better just doing nothing. But it is also true that often doing nothing comes with a lot of emotional pain. So as investors, it's always nice. It's like a reality check that is often needed when you start feeling, doing this kind of work is easy, and then boom, you get slapped on the face because, like it or not, a 40% drawdown in a month or so is quite brutal.
Yeah, and we've had a little bit of a retracement, but obviously still down a ton from the highs. Steve, how have you been since we last saw you?
Been great.
Okay, and Matt, how have you been over the past couple weeks?
Past couple weeks. Has it really been a couple weeks? Well, it's been good over here. Continue to invest. I'm having a lot of fun with this retracement. Continue to invest. Venture Global. Bought some more Rocket Lab. I haven't bought any Palantir. Hasn't gotten to that valuation yet. I'm sure we'll touch on that throughout the episode. But I always love these things, man. I mean, very rarely do you get a 10% pullback in the macroeconomic environment. And so anytime we get to do that, it's fun for me. I always recognize that I always come out on the other side a happier man. But it's also great to be able to share a Palantir Weekly with a good friend, Steven, as well as, I guess, both of you. You guys, you, Amit, and Arny have become friends as well. But this Steve makes me crack up.
You're here for Steve. You're here for Steve.
Steve makes me crack up.
Matt, you want to hear something funny?
I do.
I didn't even realize I have a 13-leg parlay that I have won 12 out of the 13 games on. I just need Michigan State to win. And the payout is so bad. The odds on it is plus 184 on a 13 leg. because I took all the big seeds on
The
this.
big, yeah. 184 for 13 legs.
13, that should be like plus 20,000. Like Duke is plus 25,000. Like who makes this
Steve
up?
invests even when he's gambling. Like, are you guys hearing this? The plus 184. How safe do you have to be to get a plus 184 on a 13 leg parlay? Anybody that gambles,
it's almost statistically impossible, except for March Madness.
Does a parlay have candlesticks?
I don't understand what that means.
Like, can you track candlesticks on a parlay?
Oh, kind of. Because yes, because Steve, if you win a leg, they'll offer you a payout.
I don't know if that's true or not.
No,
Let me check.
on a couple of my buddies, if he's doing, he loves parlays.
I do
So if
not
you
have
win,
an
like-
option to cash out.
You do? Okay.
No, I don't.
Wait, what platform do you use to bet, Steve?
Caesars.
Oh, Caesar. Okay, gotcha. All right, well, let's get into it. I think we'll start with a recap of AIPCon. Pretty awesome conference. Yeah, I think it was the best one they've had. Their 6th version. Carp was awesome on stage. You had a bunch of commercial customers. Anduril, Archer, all these different companies kind of come out and explain why they are working with Palantir. You had Walgreens there, Wendy's. I guess we'll start with Arny. What was your reaction to AIPCon? Do you think it was a little bit different from the previous AIPCons? And did it reinforce your belief in Palantir and their customer stories around their use cases for AI?
I would distinguish 2 components. On the event side, I would say it was perfect. It was nice to see the evolution. We have been together last year to an IPCon. It was gradually improving. I believe at this point, I struggled to see what could have been improved from an organizational standpoint, because everything was nice. Like the intro was boom, powerful. The environment, like how the presentations were managed, also in terms of slides. So I think everything went very smooth. There was also a very nice guy making interviews during the time break. I encourage you to see also that one. And talking about the guest, I believe it is so nice not only to see a very different wide range of customers, different sectors, but also seeing some familiar faces, how they evolve. There are even customers like the Paraxel one already saying, okay, we can't wait to be here even next year to keep following you with what we are currently building. And remember, like a couple of years ago, there was neither APCon, it was FoundryCon, and there are some customers that regularly we see them evolving. So that gives you a sense of perspective, but I think only with Palantir we could actually see. Maybe we were excited a couple of years ago for just seeing the ontology, and now we are talking of fucking freaking AI agents are almost completely automating the jobs, with humans just checking, okay, this suggestion I'm receiving actually makes sense. Let's implement it. Oh, yeah, this is cool, but we could do actually better. Okay, I tell the AI agent what I don't like so that the next time it will be better. This stuff is crazy. I sent some links to friends that are operating in the corporate world, and it's like, wow, like this shit is real, because everybody now wants AI agents. But even a friend who works in AI in engineering was telling me, oh yes, I'm really willing to start thinking how I can implement agents to my clients, but so far it seems like so distant. Like, with this technology that is possible, but making it a reality seems actually so complicated. And Palantir is showing that in literally every vertical with already complicated use cases. That's while all the other companies are still like, look at Salesforce, like AI, and meanwhile they're slowing down with their product, which is essentially just a chatbot. It's not an agent doing stuff. It's a fucking chatbot.
Yeah, I would agree. I mean, I thought the presentations were absolutely incredible. I think these were the best presentations we've seen from the past 6 AIP cons because it seems like the customers have a more clear story in terms of how they're using AIP, but they also understand more deeply the actual outcomes they're getting. And so they can communicate and reverse engineer why those outcomes were possible in the first place. Matt, your reaction to the 6th AIP con and if you think it deepened Palantir's broader moat in the AI space?
Well, I was happy to see a familiar face in the crowd, of course, during the halftime show. And then I haven't had the opportunity to look through all the CEO interviews that you've done, but of course, excited to walk through that as well. But, I feel like the company's really starting to hit their stride. It makes definitely a lot more sense. The presentations are getting a lot cleaner. But the thing that's impressive still are the people that come in with 6 months or so of actually utilizing the software and being able to come up with great use cases and starting to see traction. And it just goes to show the true value of the software. And it goes to show how net dollar retention is going to be something that will keep the business up and running. We knew that obviously net dollar retention was something like 30% several years ago, and it has dipped below the teens actually at one point into the single digits, year over year, and has started to reaccelerate now, going up to 20%. And Arny and Amir and many other folks have noted that alone makes it very simple to grow revenue year over year. And I agree. I think that's something that I was probably the most excited about. But overall, AIPCon continues to hit its stride. Carp is always the man. And it's always good to see new people come out there. I'm hoping one day that UDOC has a presentation. Did you see anyone from UDOC, Matt?
I did not this time. I said the last time I did, but not this time. Steve, did you catch anything from AIPCon and any general reaction to it?
You really think I didn't watch AIPCon?
Well, you're busy with the basketball games, and so
AIPCon was the previous week. So everybody in the chat was saying that I'm using a Timo mic, so I actually had to go get my real mic.
Wow, this is the definition of peer pressure. That you are empowering the chat by giving into their demands right here. So good job.
No, you know what? I think the bottom line is if my headset wasn't working well, they deserve a good mic.
That's nice. No, they do. I agree. They do.
It's very kind of you, Steven.
You're very kind. They thought you went to go get milk. So
I actually have chocolate milk right next to me.
How do you like? I don't understand how you drink chocolate.
Show us what you're sipping on.
I drank chocolate milk when I was in 5th grade, bro. Like, you're a grown man drinking chocolate milk. Like, I don't get it, bro.
It's something you typically drink at night.
He'll drink chocolate milk at 4 a.m. Like Steve he's a milk guy for some reason.
Yeah, it's delicious.
Okay, what did you get from AIPCon?
Well, before I tell you what I got from AIPCon, what I'm interested in is what the three of you feel the most important partnership coming out of AIPCon is.
It's a good question. Arny, you want to go first on that?
Well, I would say the most intriguing one for me was the conversation you had with the guy of the holding TWG, which essentially disclosed that that guy was one of the earliest adopter of Palantir, even like the first commercial client that already faced Palantir in the defense space, and it was like, okay, let's try to implement this at JP Morgan. And we knew that JP Morgan was one of the earliest clients, but now we had the opportunity to listen from the guy who actually started everything. So that was, to me, the most intriguing one.
Okay. Matt, did you have a favorite partnership you saw?
I think the thing that I always like to see is Palantir stretching their neck out and taking a risk in something like Archer. And while I don't necessarily know much about Archer, I think that it's a space that will grow regardless of whether or not Archer will succeed. And so having the fundamentals, and I thought the same thing about the SPACs back in 2021, even though a lot of people didn't necessarily agree with it. They thought $1 billion worth of capital was a lot. I think it shows true ability to try to innovate into new sectors, which hopefully can create new things. Like when you get so many clients underneath a particular software, you can create something like what's the newest manufacturing one? I'm just completely slipping my mind. Warp speed. So you can create. I wanted to call it Waypoint for some reason. If you get enough people specifically on a specific software, you could tailor it, help them in some sort of way. And not only that, but then you have a little bit of talent within your organization that knows a little bit about that sector. So I thought that one was bold.
Can I underscore something? Like a couple of things that stuck to my mind. One was the Heineken supply chain transformation that they disclosed. They said something like, we realized we did something we tried to do for 3 years in 3 weeks or 3 months. It was something brutally in comparison to the attempt that the company itself already tried. That gives you a perspective on how much time and cost you can save while also having something that works. And the other was still related to supply chain, the Frosty from Wendy's logistic arm, supply chain arm, where essentially they said, look, it is thanks to Palantir that not only we are saving costs, but actually this readiness to new changes gave us the opportunity to capture a lot of revenues because we realized, this promotion that we started is working, but is working so well that we needed to adjust all the logistics to manage the event properly to capture the opportunity. If they didn't have this readiness, this almost a real-time sense of what's happening, they would have lost a lot of revenue. So it was fascinating to see how even the logistic arm that is more thought of, if you improve it, you save cost, actually it can help generating revenues.
Yeah, I agree. I think the Databricks partnership was really interesting. I think the Wendy's one, as Arny said, was really interesting. KKR was interesting. I mean, they unloaded about 15 to 20 new commercial partners, or maybe they weren't new, but we didn't know about them because January and February, we had 0 press releases. And then in March, they just bombarded it before AIP. So I thought it was a good strategy. And I think we got a lot of interesting, diverse ones to look at, Archer being another one as well. Steve, your takeaway from...
Man, none of you said the one that I was the most interested in.
Oh, Qualcomm. You like that one, right?
Yeah. And your chat is hilarious. I can't read it because it just makes me crack up. Hilarious.
What do you think I deal with for 7 hours a day?
But Qualcomm to me and Heineken was the runner-up. Heineken because of the manufacturing and the supply chain. I think it's going to be huge because of the sheer volume and it's a cross-border company. Qualcomm, I think there is so much potential going forward because the Snapdragon chip is the leader in mobile for tablets and smartphones. We don't know what type of chipsets are going to be in robotics, but it's not just humanoid. There's going to be smaller robotics, and I think the 6G ramp is going to be massive when that eventually comes, and the Qualcomm one just has so much potential. I think people are sleeping on it.
Yeah, and I still think we need to get more details on it, but it just Archer, Wendy's, Qualcomm, KKR, Databricks. I mean, Warp Speed had a ton of them. They had drone companies. There were just so many they unleashed in the past month or past week, and it's leading me to believe Q1 might be a pretty strong quarter.
I hope it is.
So that gets us into the next conversation, which is price action and valuation. We are back in 91. Arny, let's start with you. What do you think about the current price? We went all the way to 72 at the lows from 125. Now we're back in 91. Maybe Trump says something next week. We go back to 70 or we go back to 100. How are you kind of thinking of the price right now?
Well, in hindsight, we have to realize that probably we have run too much too fast. And obviously, when you are in, it's hard to be detached from from the valuation, especially when you see things evolving in the right way. But it is also true that it's not, Palantir dropped because it was overvalued, while all the rest of the market just stayed flat. The reality was asset managers decided, okay, now is a good moment to take profits on super high beta stocks. Let's sell generally US, more specifically tech, more specifically high beta companies like Palantir. As a matter of fact, you also see Tesla and Robinhood being slashed half in the same way. So that to me is actually an encouraging sign. It is more worrying when you see all the market up while a specific narrative on a specific company down for fundamental reasons. We don't see any real structural problem so far on the AI narrative. We don't see particular problems on Palantir. Actually, I would argue it is even the opposite, that we have got so much substance backing the business, backing the price right now, that is even hard to really digest. Okay, are there signaling that Q1 is actually way stronger than it seems with these bomb press releases bombs? What's happening here? Personally, I don't think the management will lose the opportunity to help the narrative keep being strong. With this said, is not that the management can manipulate the price or whatever. It's like the management can help the narrative being strong, and I believe the narrative now is very, very strong besides the short-term macro. To be honest, 30-40% drop with Palantir is a lot when you have a very strong position. Personally, I do have a very strong position in Palantir. So you do feel a wealth effect when a sudden drop happens this fast. But the reality is we have, that's almost the routine we need to consider when we invest in this kind of stocks. The fact that specifically asset managers decided, okay, let's get out of US, let's get out of high beta stocks. Frankly, I see that as an opportunity. If I can just touch the macro side, the bottom line I'm seeing is all the worries about tariffs and so on gravitate toward the fact that Trump essentially wants the 10-year treasury yield to go down. But if that happens, that actually the treasury decreases, the best beneficials for that are actually the stocks that have been sold the most, the high beta stocks like Palantir, Robinhood, and Tesla, which is essentially why I'm very heavy on these three guys.
Okay, that is fair. Before we get to Steve, because I know we just had a new article about this, I'm linking that article right here in the chat. Matt, your thoughts on $90 currently right now?
I think not surprising. Firstly, to see it kind of raise up, the market's kind of seems like it's taken a short-term bottom and starting to turn up in terms of direction. So I've seen multiple stocks up 10-20% since their bottom, specifically the ones that got impacted the most. Also not surprised to see it down from 125. I think while I believe in the long-term vision of Palantir, I think it's overextended here. And I'm with Steve. A lot of the things that he'll bring up in his article, I think, having multiple hundreds X in terms of price to earnings while you are growing at a not too dissimilar rate in terms of top line growth as Salesforce, and yet being valued more than Salesforce with a fraction of the profit is interesting. I'm sure Steve will bring that up again. I think he did earlier. To be valued at the same as companies like Chevron and many other great legacy companies that have had hundreds of years to develop and generate upwards of $30 to $40 billion per annum, and yet you were delivering a fraction of that. I don't want to say is a slap in the face, but at the same time, I think, while I believe in the long-term brand and I'm a huge believer and I use their software and I love their software at work, it's a game changer comparatively to what I've used in the past. I just think that, a $250 billion market cap is just too much. But I'll for my hope is, and I guess there are some people out there that likely purchased at $100, $120. My hope is in the long term you will still continue to do well. I do see this as a $1 trillion company one day. It's just not worth $250 billion right now.
What is worth to you then?
What's worth to you, Arny?
I believe more or less we are in the place where we should be, given the information that we have. The fact is, as time goes by, a lot of information starts emerging that gives you a sense of the future direction. I was more scared, to be honest, before the last earnings release, where I was, okay, the SaaS component could make us receive a big hit. And at the same time, I was thinking, okay, stuff are actually going very well, but the latest earnings results were so strong that made me realize, okay, no, I'm actually underestimating how well stuff are going. So overall, if the momentum already stays more or less like this one, but I believe the momentum will keep improving, and I'm talking about the momentum of the business, not of the stock. I believe we are not overextended. I believe we are just in the area where it makes sense to have it or to buy it. We should not just expect a crazy upside in a relatively little time, as when you have a very strong multiple expansion from, let's say, from the one that we had, like from 30 up to now. It's just, okay, can Palantir make above average return from here? I believe yes, because the top line is growing, I would say, at a very interesting pace compared with all the other software guys. But there's a key difference. While the other guys are kind of stuck in their structure, what we're seeing with Palantir is they're deeply deploying AI in their own business, which means we are thinking, oh, yes, Palantir is growing at 30, 35% top line, but the real magic is on the bottom line, which makes me think, okay, if stuff keep scaling, and I don't see reasons for why they can't keep scaling, I would say 100, 120 price to free cash flow is obviously expensive, but at this point, I don't see it overvalued. So more mentally in my range is, okay, fine, I can have it. I don't need to touch anything.
So Arny, just to summarize your position, you think 90 is essentially fair value for Palantir?
Yes, because the counter example is, let's say 60 would be the fair value, and 60 is the price that Jefferies, Analyst, which is the guy that really hates Palantir, even if now he's gradually changing his mind. He went from Palantir doesn't deserve any premium to no, but actually Palantir is a nice company. Palantir is actually a great company. And now he wrote a note from the comments that he wrote that were written. He actually attended APCon. And after APCon, it's like, oh, the return on investments here are so strong. I'm confident that this business is actually strong. My concern is on the valuation. Like, the only concern he has is on the valuation. Stock price target $60. It's like, okay, so mentally, if a guy that is not really appreciating, that hasn't been able to really digest the depth of the business, thinks is worth $60, $60 is probably a low point in my mind that would make me think, okay, I can go extremely heavy there.
Very succinct summary.
Steve, your thoughts on what's fair value for Palantir?
Yeah, so before I give the numbers, I do want to say that I stand by everything I've been saying since the beginning, that Palantir is going to become the second most important software company behind Microsoft. I don't think anybody's more important than Microsoft only because of Windows and Office. I don't really consider Azure or Dynamics part of the software stack, but if you want to include those, fine. But I think Palantir has tremendous potential. You don't get to where they've gotten without having an amazing product. And a stat that people don't really look at is since Q2 2022, they've added 407 total customers, but they've signed 862 deals worth over $1 million. So with a net dollar retention of 120% this quarter, that is telling you that their customers like the product so much that they are taking additional modules or additional services. And that creates organic revenue growth without them having to sign up anybody else. And with the level that they keep adding new customers each quarter, they are on a phenomenal business trajectory. And the bears about Palantir being an imposter or not having good software or getting cannibalized by other companies is simply the farthest thing from the truth. It's not happening. If anything, Palantir is cannibalizing their markets. So is there anything that I just said that you guys don't agree with?
No, I do agree. I always hear you say that Palantir might be number 2 to Microsoft. I think, well, I do see the mode of enterprise software that Microsoft has. I do see a potential world. I'm not saying that it's guaranteed, but I see a potential world where Microsoft will be dethroned by Palantir. Not today, not tomorrow, probably not a decade from now, but I see an opportunity at some point where Palantir has so many interactions with so many different clients that they can create custom software like Warp Speed for manufacturing. They can create for other companies. It might take decades, but I see a world where that potentially might happen. And I still believe that that's part of the reason why it could be $1 trillion company.
Yeah, I agree with you. And the reason that I put them ahead of SAP or Workday or Oracle is because there's no real competitor to Palantir, but they're all competitors to themselves. So that's why I don't include them in that conversation. But just because I think it can become $1 trillion company or more in the future, and I think it can become the second most important software company, and I have not sold a single share, my price per share is around 13.25-ish. That doesn't mean that I have to like the valuation today. There's a big difference between long-term money and short-term dynamics. And I could care less if Palantir goes to 200. I could care less if it goes to 40. Doesn't matter because I'm not selling at either point. And I think it can be very volatile over the next year or two. But for the very long term, I think it can do very well. But the numbers do not make sense here. So I'm going to share my screen. And can you see this?
We can see it.
Okay. So keep in mind that 30 to 40% of Palantir's operating income comes from interest. So keep that in mind when you look at these numbers. So for the 2024 fiscal year, Palantir did $1.14 billion in free cash flow, $462 million in net income, $342 million in EBITDA. How you do more in net income than EBITDA? Not a great sign. Trading at 605 times EBITDA, 181 times free cash flow, and 448 times net income is absolutely crazy. Now, when you look at them versus two companies that have similar market caps, that Palantir was actually larger than a couple of weeks ago, there is no way Palantir is worth anywhere close today. I'm not saying in the future, but today, what it is. Because nobody in their right mind who is actually going to buy a business, because when you buy shares, you're becoming an equity owner in the company. Now, regardless if you're able to make decisions or not from that, you're paying the present value for all of the current and future profitability of the company. So you're telling me that Palantir is worth 207 billion market cap when Salesforce is 268 billion and does 11 billion of EBITDA versus 342 million, or 6 billion in net income versus 462 million, or more than 11 times their free cash flow, or Cisco Systems, right now it's a $33 billion market cap gap, and their EBITDA is over $15 billion, and their net income is over $10 billion. Palantir isn't even generating $1 billion, and they may not even generate $1 billion for another year or two. The multiple does not make sense. And the critique I always get is that I don't understand growth. And what I'll say to that is, I do understand growth. Palantir is expected to add 40 cents of EPS growth from the end of this fiscal year through 2027. Compared to those companies that I just named, Cisco is going to add more on a dollar per dollar basis, and Salesforce is going to add $3.30 per share. So while their Salesforce's growth rate is only 30% and Palantir's is 71%, you're paying for a lot less growth on a dollar per dollar basis, and Palantir continues to dilute shareholders by issuing shares. And paying this multiple for earnings prices so much of the future profitability in. It makes no sense. And then when you think about how much profit can Palantir generate over the next 5 to 10 years, it is nowhere close to what Salesforce will generate over the next 5 to 10 years, because Salesforce's profitability has continued to go up. And then you look at companies like NVIDIA. NVIDIA is trading at 17.67 times 2027 earnings with 47% EPS growth. But that profitability growth is going to be $50 billion or more in profits, more than Palantir will generate in the next 20 years probably. So it's very hard for me to wrap my brain around why anybody would take the chance at 90.96 a share, trading at 94.75 times 2027 forward earnings, when there are so many other opportunities in the market. It just, the numbers are the numbers. And when you look at where Palantir is versus bigger companies, similar companies, the numbers just do not justify the current valuation.
Mm-hmm. I 100% agree with you, Steve. Does Palantir deserve a premium? Absolutely, right? I agree with you. It is a premier company that is, in my opinion, doing something that nobody else is doing, which is creating custom software for the modern enterprise. I mean, I don't need to say that. They literally say that in their tagline. But to be trading north of $200 billion is very expensive. And I just, with the continuation of the dilution, the lack of current capital frame that they want to distribute back to shareholders, whether that's through any sort of potential dividend in the future, share buyback in the future, while they're continuing to only buy back $67 million worth of shares last year, is kind of a slap in the face when you're adding at this point $1 billion of free cash annually. We went from 3.9 billion last year, fiscal year 23, to 5 billion fiscal year 24, and we bought back $67 million worth of shares and diluted way more than that, considering the fact that the price has increased very substantially.
Matt, think about
I love the stock. I'm not selling a stock, but I'm not pissed. I'm telling you why. Because Steve beat my cost basis by 50 cents.
Ooh, but Matt, think about this. Palantir generated in 2024 $507 million in income from their total operations. That includes operations and interest. Okay. Palantir's operations generated $310.4 million when its cash position produced $196.79 million in interest income. The interest that Palantir is generating is equivalent of 38.8% of its total business income. That's not good, especially in an environment where the Fed is likely to cut 2 or 3 times this year. They're going to get a lot of pressure to cut next year, and inflation is slowing. the Fed is probably going to take rates to 3% or so next year. And Palantir is going to generate less income. And they're going to have to grow so much more to offset that, because not only do they have to replace the income that is losing from the rates going down, but they're going to have to generate even more to keep a growth rate up. It is not good when more than a third of the actual income that the business is producing is from interest. It's just not good.
Yeah, just to clarify what Steve's saying, if you remove that 33% of net income coming directly from interest income, you're gonna have to pretty much double that. So increase by 60% the underlying cash flow from operations to be able to offset that, right?
And you guys have seen it. I don't know if everybody in the chat has, but in Q4, Palantir generated $11.4 million in income from operations and $54.73 million in interest income. So the lion's share of what their actual operations generated in Q4 was interest. So you're basically paying for a holding company of cash at that point.
You were without the cash influx, you were borderline potentially going to be knocked out of the S&P.
Your EPS is shattered.
Yep.
Like,
and I don't think people understand that. Like,
no,
if
people
you go
don't
negative,
understand that. Like,
then you would have been knocked out of the S&P 500.
People do not dissect the numbers and look at the broader market and think about what the present value of cash or what your money is buying or the other opportunities in the market. And when you look at how much money these other companies are generating and paying less than 14 times for Alphabet's future earnings in 2027, and how much they buy back shares. I mean, Palantir didn't even buy back as many shares on a dollar amount as they diluted shareholders with. So, I mean, it's very hard to get around that valuation that we're at today.
And it's going to be hard. It's going to be hard to do that, Steve, because the shares that were distributed were granted at such a low price, right? You think about if you were to be granted $10,000 or $20,000 worth of Palantir shares several years back, right, and where the price is today, you're buying shares at $90 versus the shares that were distributed were at $6, $7, maybe even lower in terms of when, I don't know when some of these were granted. So you have to think, they might be giving out shares that, let's just say they got $10,000 or $20,000 worth that are now worth several, hundreds of thousands of dollars. And at the same time, they're having to fight against that headwind because they're having to buy at the money, like at today's prices. And so I don't think people understand that as well.
Well, and when you say at today's prices, you're absolutely correct, because you're in a position now where the prior quarter where stock-based compensation as a percentage of revenue exceeded 30% was Q2 2022. They got it down to 19.63% in Q3. And then, Q4 comes around and it's 34.5 or 34.05%. That's crazy. That's crazy. So not only are we getting diluted, and our shares are worth less of the company's earnings and revenue, but our shares, adding new shares at this level, you're paying such a high level, it doesn't make any sense.
All right, so let me get Arny in here.
I wanted to ask Arny a question. So about his basically talking about how momentum can potentially take the stock higher. So I hear that. Are you afraid that the pendulum, keep in mind, 2 years ago, we were paying $6, $7 a share, luckily for us, right? The pendulum, I feel like, has swung 180 degrees. Do you feel like you're betting on something now at $90 a share where the pendulum could come back to reality and the momentum is really the only thing that's driving this, and eventually it'll kind of collapse and maybe meet in the middle or swing the other way again and eventually go out of favor?
That's a complicated question. Is there a pendulum? Yes. And a couple of years ago, we were on the other side of the pendulum. Is the pendulum already swung enough so that we will see soon the backward movement? I believe it will not happen anywhere soon unless we see a degenerate motion in the AI space, which I believe sooner or later it will happen. But I believe that will be what would make the swing, like the pendulum, go back. Right now, we see a lot of interest, but the lot of interest is also combined with a lot of value that is actually generated. So I'm not talking about only Palantir, but in aggregate, it is clear that AI is not only a buzzword, it is delivering some productivity gains. Obviously, with a chatbot, you have a productivity gain that is relatively little compared with automating entirely a company. So that's why it is always hard to evaluate these kind of companies, because they are not like railroad companies where you essentially take the past, you can project it into the future without expecting very different numbers affecting and like what essentially for many companies you can do the same approach you have for Italian companies. Italian companies are beautiful because once you study them, it's like, or they are beautiful, like they are top tier companies, they are the leaders, and they are expected to stay leaders. So essentially, when I was studying only Italian companies 10 years ago, the ones that were excellent are still excellent now. And at the same time, what was trash is still trash. With Palantir, so which means that projecting the future is relatively easy because there is a little degree of movement. With Palantir, what we are seeing is a dynamic that not only matters more, but is evolving constantly in the right direction. And I believe we're still early to that transformation. And that transformation doesn't is only managed by Palantir itself, but it really depends also on the broader environment. Now there is the interest for AI agents, makes Palantir's offering 100x more appealing compared with 3 years ago, where yes, we bought the shares that were very cheap compared with the current valuations. But it was also true that the wind that was going in the direction of the Palantir offering was literally a fraction. And that was combined with a brand what was not a very appealing brand. Now we have all the potential wins affecting our sale, both in terms of brand perspective. Think of Make America Great Again. Think about reindustrializing the American manufacturing. Think of AI that needs to automate all the business processes. And Palantir is already offering something that the big tech are not offering. So I believe personally that Steve's approach could be right short term in terms of output. I believe that's not the right framing to understand the valuation, if it makes sense or not. What I mean with that is it could be true that Palantir is overvalued from here. I believe the way you reach to that conclusion is not a right approach, because it doesn't really take into consideration the dynamic. So you are comparing a business, like businesses that are already matured and plateauing, to Palantir that is literally showing in the rule of 80. It can be seen very clearly that is not only generating value from a revenue growth perspective, but also on the free cash flow perspective.
So let me pause there and Steve and Matt, your take as well. Basically, Arny's saying you're comparing Palantir to Salesforce, but Salesforce already had their 2 decades of 20% growth. Palantir's at the infancy of it. Yes, Palantir has priced in a lot of that, but is it the right frame to use the price to sales metrics versus the qualitative elements of the tailwinds that are going behind Palantir?
But taking that exact statement, does that mean that Palantir should be worth more on a market cap basis than Salesforce?
It's a good question.
I would say...
Hold on, Steve, you're muted.
I would say it depends.
Steve, go ahead.
Just give me 1 sec. I just got to pull one more stat.
Okay. Yeah, Arny, you can keep going. So, I mean, yeah, if Palantir is at the infancy of its growth, does it deserve to be worth basically Salesforce's market cap? Even if Salesforce...
I would say the answer is no, right? I mean, Salesforce is a great company, Palantir is a great company, but even if you're growing slightly faster, you do have the advantage, to use Arny's exact words, you have the advantage that it's a younger company. It hasn't necessarily had the opportunity. So its growth numbers should be larger than something like the Salesforce. So the fact that Salesforce is still putting up these numbers and is still, a 200-some billion-dollar company is evidence that, in my opinion, Palantir is overvalued, regardless of whether or not it might be in a league of its own.
To me, it's like comparing Ford with Tesla. Even if Ford can have a relatively bigger number of revenue, I believe if you consider the company holistically, it would be stupid to value Tesla and Ford near closer. Now let's avoid how specifically Tesla is valued compared with Ford, but as a framing, because what we are seeing is Salesforce is not a company that is able to really grow organically with new striking offering. Is more a company that have been used to acquire new companies just to stay relevant. They're not very good at integrating them, and their offering is not that appealing any longer. Maybe it was completely revolutionary 20 years ago. Right now, Salesforce is there because it's Salesforce, and we have been just used to do that. With Palantir, what we are seeing is a company that is doing it all. Is able to expand their revenues, is able to deploy AI internally and externally to make their numbers explode in terms of marginality. They're developing new products to capture further waves. And we have been seeing that for many years. And I expect that to continue and to create this feedback loop that makes Palantir essentially capture the entire market. So if you use similar framework to evaluate those two companies, I believe that's wrong in principle. Obviously, it makes you think, okay, if Palantir is worth, in terms of market cap, a similar or even higher price market cap than Salesforce, is that really deserved? And that's why you really need to look at the quantitative numbers, but mostly you need to look at the qualitative aspects that makes these numbers evolve in a direction or in the other. With Salesforce, when you look at it quantitatively, okay, growth is slowing, but focusing on margins. But when you look at the qualitative things, it's like, that's disgusting. Like the story, I struggle to see how in 5 years from now can be a very appealing story, while in 5 years from now, Palantir can be something crazy.
Thank you. So I apologize to everybody because I did this with my left hand on my laptop. But these are the EBITDA and cash from operations numbers from 2015 to 2024. And I only started in 2021 with Palantir, which is on the bottom, and this is all in millions, because that was where the data started turning profitable on cash from operations. Now, the idea of business is to create a product or a good that fills a void, solves a problem, and generates a profit. So to think that Salesforce is irrelevant or going to be irrelevant when they grow their cash from operations and EBITDA year over year is crazy. They are still growing, and they continue to grow year over year. They grew their cash from operations by almost $3 billion year over year. Palantir hasn't even generated that much cash from operations in their entire life as a company. They grew their EBITDA by, what is that? $1.5–2 billion year over year. Now, Palantir has a lot of potential. There is no question about that. But they are getting a valuation today of Salesforce numbers on potential that nobody can prove or disprove. And nobody knows if they're going to get there or not. The difference is Salesforce is already there, and they are still growing. And they are scaling their platform and creating more levers to pull to increase profitability. Business is about creating profits. Investing is paying for that profitability. So Palantir may be growing on cash from operations and their free cash flow. But when you come into all the other business expenses, their operating income, EBITDA, and net income is a fraction of free cash flow. And when you have that much of a disparity, that's also not good. But to think that a company like Salesforce or a company like Cisco, their best days are behind them when they are continuously increasing profitability is just the furthest thing from the truth. Not to mention, Salesforce continues to upsell all their clients, continues to have a moat around their business. And when you look at what you're paying for, the next 5 years with Salesforce is likely to be 10 billion plus every year of both EBITDA and cash from operations. Palantir will not be at $10 billion on either of those lines, most likely for at least a minimum of 4 to 5 years. And I'm being very generous with that number. They are not going to generate anywhere near the profitability over the next decade that a Salesforce would. Yet 2 or 3 weeks ago, they had a higher market cap than Salesforce. Regardless of what people feel about the product and how good it is or what problems it solves, profitability is profitability. And that is what matters with investing. And the valuation on Palantir makes zero sense when you stack it up to companies that have a market cap that is roughly the same.
I have a counter argument that is quite the extreme point of what we are saying. If we apply the same reasoning that you are applying right now with Salesforce and Palantir, with Salesforce being already like the big leader that is printing net income, free cash flow, and so on, and we say, okay, there is no reason for why Palantir can be worth more than dinosaur Salesforce because Salesforce produces so much free cash flow. I believe you would commit the same error in thinking, 5 years ago or so, let's buy Intel because look at the black the black boxes you see here.
Arny, I'm going to stop you right there. The story with Intel changed. Intel
wait a second. Why the story of Intel changed? Because it was focused into let's produce numbers that makes investors happy. Let's forget about what makes the business keep striving in 5-10 years from now. So
Intel didn't
that's a good point. That's a good point. Hold on.
That's not good. Intel's flat from the entire time from 2012 to
let me at least summarize Arny's point, and then I'll give you the point. Let me summarize the point. The point Arny's making is, let me just summarize the point. Arny's argument is, hey, Intel essentially lost focus on the future. Their pricing metrics looked better than like an NVIDIA, AMD, whatever. But the reason NVIDIA outperformed is because they were more focused on the future. So from that perspective, again, this is just the nature of his argument. Palantir's focused on the future. Salesforce, theoretically, the argument is focused on the past. Their numbers look better than Palantir, but eventually there could be a turnaround in terms of
Salesforce is doing AI as well.
They're going to have over 10,000 AI agents.
That's this. You can respond. You will have plenty of time to respond.
The argument doesn't make sense for the simple fact that Intel had a very fatal business flaw, and they did not produce numbers that investors like. That's why people were selling the stock.
The net income was 10x the numbers of NVIDIA, and the market cap of Intel was actually higher. So it's exactly the same dynamic. But suddenly it became clear that one was investing for the future, and once that future happened, it captured it because it had a good market fit. The other was focused into, okay, let's make the numbers look okay. Let's pretend everything is okay if we pretend, we are an AI leader and your growth is just slowing down.
But that's not what happened with Intel. What happened with Intel is they focused on the wrong opponent. They focused on AMD, and you had a Bitcoin mining craze that captured the narrative and made AMD and NVIDIA both go up. Pre-ChatGPT, NVIDIA stayed out of the graphics card market. Both of them got a multiple on it, and NVIDIA grew into a multiple that at the time did not make sense. but the multiple ended up making sense, and now they're undervalued, and they have generated a ton of profitability because they make the best product. At the end of the day, the best product is going to win. And AMD started taking a chip out of Intel. It was a business flaw that their both got absolutely destroyed.
Okay, so Steve, to their point, we have someone who I think we respect in the chat as well, Coatstrap. He says, Palantir is getting rid of their own SaaS products and replacing with Foundry native solutions. Salesforce is the new major steel mills. If you can make the argument that Salesforce gets left behind the way Intel did, I'm not saying that's going to happen, but just as a thought experiment, would that justify the current price today or the narrative on
No,
momentum?
but you have too many other companies that are evaluation. Like, look at Cisco. And I get it, Cisco's not AI. Well, they are AI because of what they're doing on the back end. But they are not the same AI as Palantir, but they're still growing. And they're within $40 billion of each other. And Palantir won't generate the same profitability as Cisco over the next decade. And then look at companies like Oracle. Look at companies like Adobe. I mean, look at companies like Workday. There's too many companies that generate so much more profitability. Business is about profits.
And to help Steve's point with this as well is if you look at NVIDIA, okay, yes, maybe in 2018 it had a peak, but it also retraced 60% from that all-time high.
That's true.
And then if you look at 2021 during the GPU craze and after the pandemic, everyone was loving it, right? And the stock, let's just take some quick numbers. Of course, this is split adjusted, but peaked out at $32 a share and dropped all the way down to $12 a share. So that's a 66-70% retracement as well.
Yeah.
Granted, yes, 2022 impacted a lot of companies, so you can't, remove that entirely from the discussion. But if you think about it, I mean, it's not to say that the pendulum didn't take a breather and go back to the other direction. Now, another piece as well. I'm trying to remember what the thought process.
Well, Matt, what do you think about this whole Intel comparison as a premise that Arnie's making?
If you looked at Intel from the graphic that Arny pulled up, Intel's net income was flat for like 5-6 years, from 2012 all the way to 2018.
They weren't growing.
They were
focusing on the wrong products.
Oh, so your counter is Salesforce is growing. That's the difference.
Yes,
Salesforce
massively. As Steve alluded to, it grew $3 billion. What is that? $3 billion in EBITDA or something?
I mean, think about it. Think about exactly what I said. Their cash from operations grew by almost $3 billion year over year. That's more than what Palantir does in revenue. Think about that. They grew their EBITDA by almost $3 billion year over year, and Palantir had a bigger market cap than them 2 weeks ago. Yet they didn't even generate $3 billion in revenue. It's the
same conversation that you're having with things like PayPal and some of these other companies, and Steve might school me on this as well. But a lot of some of these companies, their EPS is growing, but only due to buybacks, right? So if you don't have underlying company net income growth, and as Steve always likes to remind everybody, which I think is a huge point, if people don't necessarily agree with Arny or Steve or myself or Amit on this, what I want people to hear about is when you're buying a share, act like you're buying the entirety of the company, right? Because that's what the real numbers are, right? I think people get so lost in the actual share price of this, that, and the other. Act like you're buying the entirety of the company when you're making these decisions. Because what we're not talking about is how much EPS and stuff like that. We're talking about actual total net income growth, total EBITDA growth, etc. But what I think, what I was trying to allude to is just like, if you look at some of these other zombie companies, of course the price earnings multiples are gonna. If you look at GM's earnings are cyclical, so of course they're never going to get more than a 10x PE. And same thing with Ford. So, and same thing with these oil companies, right? When oil prices are good, they're never going to get more than a 10x price multiple because they have peaks and they have troughs. Versus when you're looking at something like a Salesforce, you're going to have a more generous price to earnings because it's going to grow into that. Same thing with Google. Google's always trading at a 20 to 25x multiple, not because people want to, but because it continues to grow at a pace of 15 to 20% per annum, coupled with buybacks, right?
And remember, it's a lot easier to go from 1 to 2 billion than 12 to 15 billion. It is a much different ball game at that part. and Salesforce is at that level, and they're expected to have 30% EPS growth over the next 2 fiscal years. I mean,
That's more impressive. No
it's
offense, but that's more impressive to me than
way
Palantir.
more impressive. Way more impressive.
Arnie,
That's
go ahead.
according to estimates that 9 out of 10 were completely wrong on Palantir. For the reasoning that, the more you grow, the more friction you will have to grow. But what we are seeing
Arnie,
is
hold on.
the opposite.
For the 2026 numbers for Salesforce, there's 49 analysts that are the consensus on that. For 2027 or 2025 is 49 analysts. Next year is 46 analysts, and then you have 15 analysts for 2027. That's hardly 7 or 9 analysts.
Well, that assumes analysts are great at predicting the future, which is not necessary.
And there's 22 for Palantir, 21, and then 7. So there's a much bigger pool covering Salesforce, and 30% is the consensus. And yes, people can get things wrong, but once again, when you look at the charts that I showed, Salesforce has continuously grown. I mean,
Obviously,
look, the numbers are the numbers. I'll make you a bet right now. Any amount of money you want to bet, over the next decade, Salesforce generates more profitability than Palantir. You name your number.
I don't care about betting with you. I'm already betting with my money quite very heavily on Palantir. So that is already intrinsically my bet.
I think the bet should be on share price more than profitability. Because, yeah, they're probably going to do more profit than Palantir. Like, obviously, they're just a bigger company. But the bet is, will the market give them a higher multiple, right? That would be more interesting over the next decade. Do you think Salesforce from whatever it's at 350 right now, Palantir from 90, which one outperform? Because that's what we care about, right?
You can't do share price. You got to do market cap.
But we care about the share price.
No, but share price is dictated on too many things. Earnings per share, buying back shares, valuation is market cap.
Anyone just cares about will they get a better ROI in 10 years from either stock. That's what the bet should be. If you were going to do a bet, right? Like, where does the street give the multiple to? Because right now, okay, let me ask this question, and Arnie, I'll go with you first. Why is Palantir getting this excessive? No, let me go to Steve because you're arguing the count. Why is Palantir getting this excessive multiple? If you're showing all the numbers to show that it shouldn't get this multiple,
it's riding momentum. People just bought it up with momentum. It popped on the quarterly earnings, and algos picked it up and kept driving it up. I mean, look at your chat. You have one of the biggest Palantir communities, and 2/3 of the community is not buying shares. There's more buyers than sellers at this point. But eventually that can change. Tesla went down 70%. NVIDIA went down 50%. And then they went back up. At some point, this is going to change. I kept telling you, it's not going to go up in a straight line. And look, I do believe Palantir is going to be a larger market cap down the road. I'm just saying right now, there's probably a better chance that shares continue to sell off than go up because the numbers are nowhere near this justification. That doesn't mean that in 5 to 10 years from now, it can't be a $400 or $500 billion company.
Arnie, why do you think we're getting the multiple? If is it just algos and hype to you, or is there something more?
I believe there is something much more. I believe what we are seeing right now is just the beginning of the true narrative on AI to take off. Right now, we have been seeing that mainly on the chip side, but so far, if we exclude Palantir, on the software side, we haven't seen it yet. But at the end of the day, if you deploy a lot of chips to build data centers, AI factories, how Jensen likes to call them, is because you want to deliver business value. And as of today, we are still not seeing much apart from Palantir, which makes me think, okay, the value that can be captured is there. It is the others have no idea how to capture that. Nobody pretends to be a very steady ride. And I'm aware that the comparison between Intel and NVIDIA is not the perfect comparison. And as my premise was, okay, let's make an extreme example to show the point. And the point is, if you focus too much on the numbers without understanding really how the numbers are generated and what is the dynamic of the numbers, including the qualitative aspects, I think you miss the broader picture. And the broader picture was, Intel was focusing on the numbers, pleasing investors short term, rather than really building the products to capture the market in 5-10 years from now. And that is what happened, and that was what generated essentially the extreme divergence between the two companies. I see that in the same dynamic of Salesforce versus Palantir, just to name two companies, but it's not that different also from, you mentioned previously, PayPal. PayPal was focusing to just doing stuff rather than doing stuff well. And the comparison now with, for instance, Robinhood.
Rather than doing stuff well?
Yes, I would say they started buying companies stupidly. They were not focusing to making their
Arny,
products.
you realize that they've grown their revenue year over year, every year, right?
Yes. That doesn't mean they are still the same monopoly that they were 20 years from now, 20 years ago. Right now, the comparison with Stripe starts getting more difficult. And I see the same dynamic with like...
But how is that possible if PayPal generated the most cash from operations or free cash flow this year than they ever have?
Yes, so the business is still improving because the market is big. They're not a monopoly any longer.
Well, I would agree with Arny there. PayPal's growing 7%, dude. They're not growing anymore.
But once again, PayPal is still growing. So saying that they're not doing something well is not really a fair statement.
Look, if you're a monopoly and you're not any longer a monopoly, you're not any longer a monopoly.
But they were never
a tier one company any longer.
They were never a monopoly.
Oh, they were. 15 years ago, they were.
No,
yeah,
they weren't.
There
you
was
could
no
use American Express, Visa, or MasterCard online from the beginning of days. PayPal was never a monopoly.
No, but Steve, Apple Pay, there's a lot of payment competitors that have come into the space.
Right. And the fact that there's that many payment competitors and PayPal is still growing is a testament to how valuable their products are.
Well, the stock doesn't reflect that.
The stock doesn't reflect it, but the revenue and free cash flow and profitability does.
No one cares if the stock, I mean, like at the end of the day.
Regardless if people care or not, the profitability and revenue shows that they're still relevant.
No, but I think the stock price here matters because that's Arny's point. Arny's point is he's agreeing with you guys on pricing metrics, but then he's disagreeing on the context of how does the market interpret two narratives. And in this case, the market has said PayPal is a shitty company that we don't care about, even though they're buying back damn near half of the company. And that's what's led it to be a shitty stock, which theoretically could happen between Palantir and other SaaS companies over the next decade. We'll see, but that is what's happening with PayPal.
The higher prices you pay in terms of like the higher the valuation compared with the metrics you go, the higher the risk it is. Because essentially your return as an investor will be driven by the price you pay compared with what you get. Now, the price you pay is actually very easy stuff. Like you can see the multiple and say, okay, this is a high multiple or this is a low multiple. You don't need a master degree in finance to see that, okay? What is really difficult is understanding all the qualitative aspects that generate the current numbers so that you can understand, you can have a sense of the numbers that will be generated in 5-10 years from now. So if we see this dynamic, for instance, let's make a comparison, PayPal versus Robinhood, what I see, and I'm not an expert on PayPal, I'm not at all, okay? But what I see is one company is now playing not to lose. They're trying to, okay, let's somehow survive. While when I see Robinhood, I see a company that is clearly playing to win. Palantir is not playing to survive like Salesforce. Palantir is playing to win. And the qualitative aspects make us see, okay, one company is delivering 100x in terms of speed of capturing the market and new markets. The other is just doing okay. If you take this dynamic and extend it for long enough, you see the company that iterates the most, especially in tech, capturing almost all the value. This doesn't mean that one company is trash or it can't be a good investment. I just say that when you look at the pricing metrics, how our friend Emir's like to be fixed on, when you're talking about pricing metrics, you're not really doing a valuation. The valuation requires for you to understand also all the qualitative inputs that will make the future numbers. And with the comparison of like Salesforce and so on, you say, okay, there could be a very strong element of risk if right now we are buying Palantir at a market cap that is grossly similar to Salesforce if the numbers are very, very small. That's why you need to be aware and you need to have this kind of discussion. You need to follow Palantir weekly to understand, okay, that could make sense somehow, because if you stop at the pricing metrics, you would say, that's stupid. That's essentially your point. If you focus
Arny,
into
I have a
the
question for you.
dynamics, that could be not stupid, or maybe, who knows, maybe it's even undervalued.
So if you think that Palantir is fairly valued or close to fairly valued, are you purchasing shares now? And
Well,
if the
I did.
answer is no, what's the last price point that you purchase shares at?
I'll tell you.
While he's looking for that, let me flip the question. Why are you not selling Palantir, Steve?
Because I don't need the money. And I don't want the tax burden.
Okay, but that's too easy of an answer because Arny could say he doesn't. He already
No,
has a
it's
big
the-
position.
No, but that's a fine answer too. I respect that.
Give me a real. Anyone can use their personal situation to. Arny could
I
say,
could
"Oh, I don't
answer
need to buy
mine
more
as well.
Palantir." Right? Arny could say, "I don't need to buy Palantir. I bought my shares at $8."
Yeah, and that's fine. I'm just asking if you think it's fairly valued, are you buying shares? It's a
If
legitimate
you think it's
question.
overly valued, why are you not selling your shares?
Because the profit that I have, one, if I sold and played that game, it would be a very big tax burden, and I would need Palantir to fall a certain amount to be able to rebuy the same amount of shares. I want to hold this for the next decade. So there's no reason for me to sell it here.
Okay, but if you have a ton of shares, there's no reason to buy it either if you're holding for that. You know what I'm saying? So that's why it's more
No,
so a philosophical question than a specific question.
But if it's fairly valued and you think it's going to go higher, there is a reason to buy more shares.
Yeah, but if you think it's overvalued and it's going to go lower, there's a reason to sell.
Not if you don't want the tax burden.
Taxes suck, man. And
How
then you got
does
to
it
figure
suck?
out when you buy in.
Admit, you know how you had that problem. You know the type of tax bill. That's not fun.
No, I paid it. Yes.
So
That's 100%. I've played that game before where I think I'm too smart and I get it and I'm going to buy in lower. And I've seen a lot of people do the same thing with things like Rocket Lab and Palantir as well this past 6 months, where they think that they get it, that it's overvalued. I understand where people are coming from, and I personally think as well that it's overvalued here as well. But I've been burned in the past by thinking that I'm too smart. I'll buy back lower, and one of two things happens. I either forget about the stock and move on, and then by the time the dip actually does come, I'm not paying attention, and it blows past me. And I could have had a great entry price, but you have to time it 2 times, right? You have to time it at the peak. You have to time it at the bottom. And who's to say that you're going to be able to have the money there at the bottom? If you sell, are you just going to be sitting? Like, for example, for me, if I sold my Palantir at its peak, am I just going to sit on $500,000? The answer is
you got to
no.
put it to work.
I'd put it to work somewhere. So by the time Palantir does come back down to an appropriate valuation, where am I going to get that money to buy the shares?
All of that makes a lot of sense. Like,
Not to mention, Palantir may not go down. So you may sell thinking it's overvalued, and for some reason it keeps going up. So it's a lose-lose situation on that front.
The reason why I'm not selling it is because I don't think it's going to get to a $250 billion market cap. I think it's going to get to $1 trillion. So I'm okay waiting around. I don't need the money today, right? What I will be doing is making sure that when I purchase more shares, that it makes value for me, right? I've been buying Rocket Lab because I think it's a better valuation here than buying, say Palantir. But I did want to ask this question, if I can remember what exactly it was. You guys continue. I'll try to recall.
Arny,
I have 2 questions.
Yeah, Arny, go ahead.
Yes, I checked. I have 2 accounts. One where I have the shares, the big chunk of the Palantir shares that I consider no touch, and it was Palantir and cash essentially. And the other is the trading account, which is the one that I'm also tracking with Savvy Trader. Essentially, what I did, Palantir was at 20-30% of the portfolio at the top, and essentially at around 90, I switched all that portfolio into Palantir. So essentially, it was I got the hit up to 80, and now is already on par.
Yeah, I think the thing that I wanted to kind of elaborate, and I'm curious to hear Steve's point about this. If you could tell me that the usage amount that Palantir is getting on a company-wide basis, let's just say that their employees are using, let's just say 10% Palantir and 10% Salesforce, etc. And the reason why right now Palantir is not getting the revenue is because they're trying to capture as much market as they can. You know, this ambiguity piece is going to continue to play into my mind as to why I can't value the company appropriately. But what I don't understand is that ambiguity of we don't have a pricing strategy, so you know we're just going to try and take the whole market, etc. That kind of plays mind games with me because I can't see how much penetration Palantir has. So if they're not charging somebody, but they still are using the software, I can't be like, oh shit, they actually take let's just say 25% of the market for X, Y, and Z enterprise or X, Y, and Z industry. And then I say, well, Salesforce only has 10%. Then I could say, oh shit, you know, there's a reason why Palantir is valued as much. It's just going to take time for the revenue to show up. But what I don't know is exactly that, right? Is the revenue actually going to show up? Because I keep hearing about how now they're in half the hospital beds or whatever it is in the United States. I get that. But to me, that seems like the revenue number should be way bigger than it is today. If you're managing half the hospital beds and you're managing the entire NHS of the UK, to me, that just seems like you should have much higher revenue. So it is, and trust me, this I am a bull, right? Like I'm not trying to be mean. I'm just trying to understand. I just don't understand why the revenue doesn't meet what I'm hearing, right? It's not matching to an extent.
Yeah, I want to say one thing. I think that this is an important conversation to have. And I think that people in the chat need to realize that none of us are trying to get underneath each other's skins. We're just trying to have a productive conversation about this because we all have different points of view on it, but we're all bullish on the company.
This podcast is so good because we have these hard conversations
and the four of us are four of the original people who bought when Palantir direct listed. I
didn't buy direct listed.
So you bought soon after though.
No, I bought like April 2021, March 2021.
How could
that's pretty soon after the direct listing.
Oh, that's true. Yeah,
that's like 5 months. It direct listed in like November 2020.
Yeah.
So, you know, we're for the original people that have owned it and not sold the position. So, you know, we're just having a productive conversation around what is the valuation and is there a reason to add here or do we think it's going to go down? And I may not be correct. I've said that many times. Palantir can keep going up. I just think that there's going to be more short-term pain before it makes all-time highs again. That's all. Well, I fully think it's going to go up in the future.
This is the paradox here, and that's why I asked the question of why aren't you guys selling? And you had a good answer, right? Because of taxes. But it's also like all of us, I think, can acknowledge, at least to an extent, that yes, the valuation is extended right here, but none of us want to sell. And I think a lot of the community has the same feelings from the people I talk to.
Can I tell you why I don't want to sell?
Yes, please.
And I told you privately, but I've never said it publicly. So, and I hope that either Arny or Mitt says this to somebody at Palantir or somebody at Palantir is watching this. But if Palantir makes a true ERP, and I'm waiting for the chat to say, oh, they make an ERP. That's not what I mean. Yes, they make a manufacturing, digital twin, and all that other stuff. But if they make a true ERP for HR and finance, because that's the backbone of every company. Anybody who's worked in corporate America at a company that's not a small business, because small business has different rules, they can get away with just using the ADP HRIS. Anybody who's worked at a mid-market company or larger, they do everything on either SAP, Oracle, Workday, and now Microsoft Dynamics is moving in. But those are the big four. And you look at the TAM of that. If Palantir comes up with an ERP, which they very easily could, that tackles HR and finance and payroll, it would be such a huge pipe into future revenue, and it would start to take market share away from these companies, I think that would be super bullish for Palantir, because everything we've seen is whatever they make, they succeed at. So that would get me really excited about it again, no matter where the company's traded, because that's a huge market.
Yeah.
I believe you are talking exactly to why warp speed is actually way bigger than we are currently appreciating. Warp speed was essentially promoted a couple of months ago, and at APCon it was essentially the launch, the official launch towards companies. Right now we are at the second cohort of customers, so we are literally talking about 10 customers, in total, including the first cohort. And what is that? Essentially nothing. But what we are getting now are the companies that need something like that the most to improve their operation. Now, warp speed is really focusing to manufacturing, but that comprises essentially all the softwares that Palantir up to now has been focusing into integrating rather than replacing. With warp speed, they can essentially replace the ERP and also all the software that is used to manage the manufacturing processes. What they're doing, in my opinion, is let's start with these top tier customers that are receiving also a lot of attention, that literally prove the point that if these customers can scale and capture the market, I believe on this Anduril could be like the prime example, then you would have no choice of saying, oh, these companies are so much better how they do that. You look at that and, oh, but that's thanks to Palantir. In the interviews Amit had with the guys, there was one with the warp speed girl or a boy, girl, no?
Emily, yeah.
Emily said, oh, yes, we are starting here with the defense manufacturing companies, but the goal is actually way broader. Guess what? Let's spread the warp speed to essentially all the commercial clients, and voila, you have that ERP you were talking about. Only, I believe, Palantir doesn't want to be branded Palantir ERP. It's like, no, we don't want to be associated with that shit. We are next level company, and we want to produce a software that is better than everything that can be associated with.
So, Arny, let me ask you this. Could they build a separate product outside of their current software stack with Gotham and Foundry and AIP and just brand it whatever they want to brand it so that they could go after it in a separate silo and still have everything else the way it is?
Yes, the game Palantir is doing is let's integrate with everything, like with Salesforce, let's integrate with all the crappy ERPs that are there. Once you are integrated and you have the higher level overview with Foundry, but everything already works, then you start to think, oh, but let's build with Foundry. And what you end up doing is essentially you start replacing all these other vendors by building solutions on Foundry, or maybe in a couple of years, you start buying the modules of warp speed, which is essentially your ERP, but already fully integrated with Foundry, which means already works with the entire company with all the integrations above. So essentially what Palantir seeks to do, from my understanding, could be wrong, is essentially doing what they did for themselves. We are a software company. We have Foundry for our own interest. We use other software companies to run our operations. But guess what? We have Foundry. Foundry is like a nice building tool. Let's build software that actually works. And once you start from integrating everything, then you start replacing the stuff that you can start building on Palantir. And guess what? If that is done by customers, that means the more the customer uses Palantir, the more use cases it discovers, the more opportunities there are to essentially replace all these other bad companies, not bad, but second-tier companies that
Right.
people hate in the enterprise.
And I think it's important what you just said, because that's where I see a lot of value add for Palantir and why it's so exciting. Because if they were to come up with a competitive product in that area, they could get their hooks in with smaller companies, because right now they're doing a lot of big scale deals, and that's where the majority of their revenue is coming from. They don't really have, it's not that they don't have a product, but their sales aren't really generated from smaller companies. But if they create a product that can compete, they get their hooks in, and they can upsell and possibly drive net dollar retention up and get these other companies using their other products also, and they can become the complete software stack instead of just one component of a software stack.
Well, that's exactly why I believe the qualitative aspects of Palantir, well, essentially exactly what we are discussing right now, are not fully appreciated by the investing community. Because if that is unlocked, and essentially as an investor you believe that will be unlocked, will be a massive opportunity that can sustain the plus 30% growth for a long time. I would underscore one thing that really struck my attention from Amit's interviews. Two components. They were talking about the Red Cat drones, and the guy essentially said, well, Palantir has a unique advantage because these drones essentially typically need a map that is done by providers that just sell maps. But Palantir has a unique advantage. Essentially, they have all the partnerships with satellite companies, which means these drones can receive images directly from the satellites. And with a constellation of satellites, remember meta constellations of years ago, essentially that could open the door for companies to receive a stream of satellite data for that not other companies can do that. That's a case of network effect. Essentially, all the work that Palantir has been doing with space and related space companies add value to the customer that tries to build something new. That creates an advantage for that customer. And another use case that was really fascinating to me was, I think it was the last interview with Ripcord, essentially a company that takes physical books or documents, and essentially they make it digital so that you can absorb that information. Imagine all the books that are from like 50 years ago, still there, that nobody has really tried to digitalize. And this company is specifically doing that. And they said something very interesting that I think no one has ever really thought about, is yes, essentially this company to operate, when they deal with a customer, they essentially made the customer to deploy Foundry, if I understood it correctly, because this way the customer doesn't only get the data, but can get that data contextualized. So it's not only the client using Palantir, but it is also the client that is pushing the adoption of Palantir, because with that, they can make sense of that data that is digitalized. Am I wrong, Amit? I understood it correctly.
No, you're right, 100%. Yeah, it was very, very interesting to talk to some of those customers, and I think we got a lot more use cases from them as well. Matt?
I will say it's pretty interesting because Steve's right onto something, because we've created an application within UDoc that legitimately creates an export so that we can upload it into SAP.
Might as well be in Foundry, right? No.
We're doing all the work within Foundry. I don't understand why we then have to export and then put it into SAP.
Matt, are you uploading it through an EDI?
I'm not smart. What's an EDI?
It is just a process to upload information into an ERP system. It's like an API integration.
Oh, then yes.
Okay, let's end it on this, because this has been a late episode. This is one little clip I want to share from Karp's latest Fox Business News interview. Notice the smirk that he's going to have in a couple seconds, and then I want to ask you guys about what he says.
crazy it was. So now the speculation is that DOGE will have a negative impact on Palantir, although fans of your company who loved your company long before I did tell me, no, this actually is a positive for Palantir.
Well, look, at Palantir, we're very focused on what will make the West superior in the commercial space, mainly here on the battlefield. So even if it were for Palantir, I think bad for Palantir, I'd be in favor of it. I mean, I mean, how often have critics of Palantir been right? And it's like, look, buying, if you want to reform an institution, whether it's commercial or government or anything, what is the first thing you're going to do? Change the unit economics, make the customer experience better. How are you going to do that realistically in the West? You're going to buy the best software and implement it. Who are you going to buy from? So, I mean, like, and I love that we have all these skeptics. They just can keep on. The skeptics, as annoying as they are, just come out and tell the venture community how much we're going to fail. It's like, but for the somewhat idiotic skeptics of Palantir, we would probably be competing with 50 companies. So please amplify your skepticism. Palantir is very pro-DOGE. I'm pro-DOGE. I believe it's going to be great for America, and I'm supportive of it. And, read into that what you will.
Right.
But, America's going to become more lethal, more economically strong, and we're participating in that, and we're thrilled. And again, on the non-DOGE front, does anyone doubt we're doing well in U.S. commercial? I mean, all these same skeptics are like, it's like completely ridiculous.
Right.
Somebody's got to score these skeptics. You're like, oh, Palantir's a service company. Palantir will never have a commercial product. Oh, Palantir will win, but it's only with one administration. Oh, Palantir's got the best product, but CARP's too crazy. Or Palantir would just shut up about the West being superior. Their sales would go up. It's like, at what point is there a scorecard? Like, and again, I would encourage people in every institution we want to reform. What did the person say? How often were they right? How are they doing? And you've got to heavily index against that. But again, no matter what you think about what's happening in the U.S. government, I'm supportive of it. Look at what we're doing in commercial. Can you even open the newspaper and not see one of the greatest companies in the world in America partnering with Palantir? It's crazy. And I've never seen anything like this in the last.
So, simple question, Steve, is DOGE going to be a catalyst for Palantir in a massive way?
Yeah, it should be. And you got to love CARP. And you also, for me at least, I won't speak for anybody else, that's one of the main reasons I was so excited. I don't think I've ever been as excited to invest in a company as I was for Palantir because of the values that they stand for, because they're an America first company and they want America and its allies to be the best they can be. So no matter what happens with the share price, no matter if in 10 years from now or 5 years from now, I start selling because of how much the profit is, I will always keep a section of Palantir shares for that specific reason. But I think DOGE is going to be bullish for Palantir because I don't think Palantir contracts are something DOGE is going to be going after. In fact, I would argue that they're going to want more Palantir software in there because it fixes a lot of the problems that we have.
Yeah, Matt, same question to you. You think DOGE could be a tailwind for Palantir?
Huge tailwind. And the reason being is because Palantir Foundry and a lot of their other software applications were legitimately created for something like that. Massive silos amongst different departments, disparate data systems, as they like to say, that can be integrated under one hat, and then also utilizing the relationships between all of the two. I can't imagine how many different databases you have, too many different people uploading the same exact data, when in reality they could just be working off the same workbooks, same spreadsheets, and it's just insane if they were able to share. And the beauty of it is they have Apollo that allows people to truly get the right access to certain amounts of data. So you might be able to say, well, somebody might be working off proprietary data for this particular department, and then you have the ability to give write access or read access to particular types of people. That it's all beautiful. Like, in my opinion, it's utilizing the government is a perfect use case, and I view this as a huge problem, not only within the government but also the healthcare system. Think about how many different times when you go to the dentist, you have to upload your data, and then you have to go to a pediatrician and do the same, and then you go to optometrist, you have to do the same. It's like, how is this not off of one individual application or database that you can just pull up and
Right.
provide. Why do you have to provide so many to so many different disparate systems?
Arnie, you can take us home.
Look, we have no official evidence that Palantir is working with Doge, but there is plenty of non-official evidence that Palantir is working with Doge. And how Carp answered that question is one of those, I can't tell you, but I can give you the hint of what I'm thinking and what I know. And this combines with not only what Carp said, but also what Sham shared on X, explaining, Doge is becoming a verb. And that casually fits perfectly with the vision of Palantir. We know Musk and Carp are hanging out together, which could be considered a nice plus. But literally everything started already years ago when there was this tweet talking about inefficiencies in the government, especially in the healthcare. And a guy, this was September 2024, a guy said, with Palantir, it would have been easier to track where the fraud or the waste was. And Joe Lansdale, so Palantir's co-founder, wrote, we could quickly find the tens of billions of dollars of fraud and waste in Medicare and Medicaid alone. Obama even verbally agreed with that we could do what we do does to let us do it back. But then his people stopped it from going ahead. It wasn't politically useful to find all of that for some reason. Essentially, Palantir was well aware of the crappy stuff that were in the government. It was just politically not good to pursue that. And the only way you can pursue that is actually making a strong point for your campaign so that you're really wanting to tackle this pain angle. And casually, that is exactly what the Doge is doing. So I'm personally very happy to see this discrepancy between the narrative, Palantir is hit by Doge cutting cutting contracts with contractors, but in reality, that's probably the biggest tailwind it has ever had on the government side. Remember that a couple of weeks ago, there was a disclosure from Doge of many software licenses, and there were many players, among also the very big players like ServiceNow, who had like 35,000 licenses that were never used. So that was aligned with, okay, it is true that the government was spending a lot of money for useless stuff. It is true that Palantir was not named among these customers, these useless stuff. And I believe, and here is our speculation, my speculation as an investor is how they detected that is exactly like Palantir. Because how operationally you can do what Doge is doing, you need to integrate with everything. You need essentially to have the ontology of the government. You need to have therefore the ability to capture the ontology of something that has a complexity never seen before. Like Airbus, which is already insanely complex as a business, is nothing, literally nothing compared with the complexity that you can deal with a government that has more than 80 agencies, which means that there are like 80 companies in one company, and they are all interconnected. So imagine the ontology of these ontologies is like something crazy. And others neither know what an ontology is. So in order to actually to do what Doge is doing, you need all the structure that Palantir is providing. I would be curious if it was not Palantir, what other company can actually identify all this waste.
Yeah, and I think that smirk was a smirk for a reason. So I think hopefully we will see something with Doge and Palantir in the future. All right. Oh, Steve, you're muted. Hold on.
Not again.
Go ahead.
I don't think that would shock anybody. I think that they've alluded to it several times without actually saying it. I think it would be huge for Palantir if they did.
Huge.
Yeah.
I also think that I don't know if the government, it hasn't not been favorable for. Well, sorry, let me rephrase this. The world has not been favorable and receptive of Doge. There is I'm a receptive of it. Many other people are receptive of it, but it doesn't seem like mainstream media is receptive of it. I also am fearful of what potentially might be exposed if you use Palantir, and that's why some people have stopped using it. Some companies stopped using it because of that reason. It's too powerful. They recognize how much it can do comparatively to what has already been done. It'll also show the incompetency of a lot of IT departments and technology departments across the world. And I think that that's fearful for a lot of CTOs out there. And so I think that that's why you might see a slow uptick in certain organizations. And it's a culture change as well. You have to let go. You have to give them a lot of control. And once they get everything into place, though, it's a beautiful, beautiful thing. And hopefully at the same time, more people eventually see the benefits and go against maybe their CTO's judgment and say, you know what? This company is saying all the right things. They're aligned with Doge. They're about efficiency. They're about, making sure that systems communicate well with each other. What the hell is my CTO talking about if he's pushing against? And I think eventually people will read through that.
Yeah, I think the pushback against Doge has been very interesting to see from mainstream media. It has been pretty fascinating to see how special interests are trying to take it down, but I think it's going to happen. And as a country, $2.3 trillion deficit, $36 trillion in debt, we need something like
You
Doge.
saw the same exact thing with the NHS, right? Where they're like,
Hell
oh,
of
they're
a
going to have
point.
all of our data. They're going to.
That's a hell of a point. We did indeed see that with the NHS.
Well, there was previously the comment, I think it was CodeStrap, like Palantir was built for this.
Yeah. I think that's why Carp smiled.
And at the end of the day, the best software is going to win. And it's hard to say that Palantir is not at the top of the pile for the best software. So, I mean, regardless, valuation aside, we all agree that the product and the software is fantastic, not because of the financials, but because of what the customers say and the use cases that they show. And I haven't seen another company that has shown that. And it's simply amazing what they show at AIPCon. And that's why I think, and I actually titled my article, AIPCon Solidified Its Future, because it is the most important thing when you have all these companies come out, not just talk about the product, but show how they're using it, is a testament to how valuable Palantir software is for those companies. And the new partnerships they continue to announce, if the software wasn't that good, they would not get all these deals. So, and that's probably why they're getting a big valuation, because the sky is the limit. It's just, I just happen to disagree with where the valuation currently is, not where it can go.
All right. That is fair. Thank you, everybody, for staying with us for 2 hours on a Friday night, Saturday morning. We've done this 205 weeks in a row. Hopefully, we continue to do it for another 205 weeks. Appreciate you all, as always. Everyone's Twitter and YouTube is in the description. Please make sure to follow everyone to get updates on not only Palantir, but the broader markets. And we'll be back next Friday.
How much do you like to say broader market?
Dude, I have certain terms that my chat teases me about every freaking day.
Like
it used
the
to be
hand
writ
clap
large.
and all,
I would say writ large. I've grown out of that term, but now I say like a billion different terms every day. By the way, Arny, do you know what is a mocktail to you?
A mocktail? I have an idea.
Okay, good. Very good. I just wanted to make sure I wasn't alone. That's it. I just want to make sure I wasn't alone. So it's apparently a non-alcoholic drink.
The sad ones.
I thought it had alcohol in it. So at AIPCon, I told the bartender just one mocktail. I don't want to get too buzzed, and he probably was judging me. Like, right. So.
No, because for us it's like, okay, analytical. Like,
Yeah, I thought.
Admit, you can't get drunk off a placebo effect.
Dude, I got drunk off a placebo effect. I really did.
It was the emotion.
It was the emotion. All right. Thank you, everybody. We'll see you back next week on Palantir Weekly. Code says it's for girls under 21. All right. Bye, everybody.
Ciao, ciao.